Warning, warning, caution. Hey, what's up, everybody? It's Trader Tim from EminiMind.com bringing you another Monday market analysis. Looking at the ES, we've got two very bearish signs, actually three bearish signs within uh, what has been quite a bit of consolidation, a lot of sideways movement, not a whole lot of directional trade. We've got, back and forth, back and forth. We haven't really gone anywhere in the last month or so. And actually, I'm going to switch back to trading hours only so that you can see today the markets are about 50 minutes away from the close, and we're starting to form a bearish engulfing pattern, meaning this candle is highlighting the actual body of the candle is opened higher and is potentially going to close lower than the previous candle. Now, obviously, we can't say for certain until the market has closed, but at this point, that's a very bearish scenario, especially on a gap up, because we broke the prior day's lows, which a lot of times is what initiates that gap fill. Same thing on Thursday rather, we have an inside day, meaning the candle before it is much more bearish. It opened higher and closed just about where we opened the following day, but the high of Thursday never made it above the high of Wednesday, and the low of Thursday never made it below the low of Wednesday, whereas we have the opposite pattern here. So two bearish scenarios, inside day and a bearish engulfing. So the key levels that we always talk about that we'll be looking at to break are a break of lows on the ES down here at 2060s or a break of highs at 2120s. So those are our two line in the sands. The other thing to note is we have this kind of widening wedge formation where we started tight and we're making a little bit of a lower low and then hit our ceiling again, make another lower low, and then essentially triple top up here. So breaking these highs will be very important for us to, for the bears to continue the momentum right at this point. For instance, if we do not go any lower tomorrow or in the overnight session, if we open up and break highs, that will really be the only opportunity for us to get into highs cleanly without a whole lot of retracement. What's more likely to happen, given that we have retail sales Wednesday, jobless claims on Thursday, so some economic numbers that could continue to act as a catalyst to push this market around. What's more likely is the market comes down, fills this gap, and potentially trades all the way down to 2040s a third time. So while I'm not outright incredibly bearish in the longer term here, in the short term, I will be looking for a pullback either to a full retracement from Friday's highs to today's lows, like so, or even just a shorter retracement from the previous swing high down to lows 2104s that lines up with the open from Friday and as well as lows from today. So we've got some resistance at the 2104 level. That's an area that I'd be looking to get short and look for the market then to trade down from 2104s down and fill this gap. So a lot going on kind of under the hood in terms of some of these gaps. If you have the full 24 hours worth of data on, it's a little bit hard to see, but you can still see the widening formation where we start tight and then we make a low, a high, a lower low. We've now triple topped. One thing though to, I think the S&P is, pretty much looking the same as the Dow. But the index that I want to highlight is actually the Russell. And you can see how the Russell is this little rally that the Russell did have today, forming an inverted hammer, and then we had lower volume, declining volume on this rally. So if the Russell starts to break down and break lows, I would look for that to lead the S&P. At the same time, as we always talk about the volatility index, I would want to see the VIX to come up here and break this 15.5, 16.5 level, which would indicate that the markets are potentially coming into a sell-off. So those are the two, the S&P, I'm sorry, the Russell and the VIX are the two kind of confirming indicators or leading indicators in this case, where I'll be looking for those two to be the Russell to be breaking down and the VIX to be breaking higher for some confirmation that the ES is in fact going to be moving lower. However, if we do hold today and break out tomorrow, start breaking these prior swing highs one at a time, then I would look for us to go straight to our target of 2155s. Because at this point, think about it. There's a lot of people who are skeptical of this move. There's a lot of bears that are now saying, all right, we have broken the prior day's low here, so we're expecting a gap fill. Well, if all these people are short and we can hold in the overnight session and open up tomorrow and move higher, all those shorts would then have to cover, or would then most likely cover, especially as we start breaking highs, which would then push the market higher, and then the bullish folks that are skeptical that we might be triple topping are going to want to be jumping in. A lot of traders will be chasing the move, so they'll be buying, when we're up in the 2040 level, and that's what will push the market quickly up to 2155. So those are kind of the two scenarios, and kind of thinking about it in terms of who are the players and what are the traders on the other side of the equation doing. A couple of other things to note. I've got two webinars coming up this week. The first is tomorrow, Tuesday, at 1:30 Central Time. That's with Infinity Futures, and we're going to be talking about trading market retracements. And then Wednesday, I've got a webinar at 2 o'clock. That's with the Festival of Traders. And both of those links, that topic's going to be market internals. Both of those links will be in the member dashboard, and you can get registered. If you're not going to be around, you can still register, and I'll shoot out the copy of the recording following the presentation. So with that, I hope you have a great week, and we'll talk to you again soon.